Have you ever really wondered what goes on inside a modern trading firm? Forget all the movie stereotypes. Today, we're going to pull back the curtain and dissect how these places truly function. And here's the twist. We're not looking at them as a collection of star traders, but as a single, complex system built for one primary goal: survival. And this quote right here, this really gets to the heart of it. It's a powerful idea. Think about it for a second. Not a company, not a fund, but a living, breathing organism. Every single part has a specific function, and if they don't all work together in harmony, the whole thing just dies. So that's the big question, isn't it? I mean, the market is a brutal, unforgiving ecosystem. So what kind of biological machinery, what internal systems allow this organism to navigate all that uncertainty and, come out ahead? Well, that's exactly what we're going to break down. So first things first, what is its core purpose? Just like any organism, it has a fundamental mandate, and that's to survive. Its entire structure, everything about it, is built around achieving that through three specific and sometimes conflicting goals. And here they are. You've got profitability, which is what drives it to take risks in the first place. Then you have survival, which demands it keeps those risks under control. And finally, scalability, which means it needs to be able to grow without completely falling apart. Every single department we're about to look at exists purely to manage the very delicate balance between these three forces. All right, so if we're sticking with this organism metaphor, it's going to need a way to think and perceive the world around it. So let's start with its cognitive functions, the brain and its senses. This is where all the big decisions are made and where information gets processed. This right here is the core function of the brain. A trader's job is basically to take an idea, a view on the future, which is pure uncertainty, and turn it into a real live financial position. They're the ones who translate thought into action, putting the firm's capital on the line. Now, this brain of ours, it can think in two pretty different ways. First, you've got discretionary trading. This is the classic human-led approach. It's all about judgment, narratives, and understanding what makes the market move. Then, on the other side of the coin, you have quantitative trading, which is purely algorithmic. It expresses its views through cold, hard statistical signals and systematic models. So if trading is the brain, then research, well, research provides the senses, the eyes, the ears, the whole shebang. Its job is to take that chaotic flood of market data and transform it into something structured and usable. Research gives the brain a clear, focused picture of reality, which stops it from just guessing and improvising. Okay, but a powerful brain is totally useless if the organism can't protect itself from threats, right? And that brings us to the firm's immune system, all the functions designed to keep it alive and healthy. This is the first line of defense, the risk department. It acts like a protective membrane around the entire organism. Now, its job isn't to get rid of risk completely. That's impossible. Its job is to make sure that no single event, no one bad trade, can ever deliver a fatal blow. So, how in the world do they do that? Well, one of the main tools is something called value at risk, or VAR. Think of it like a statistical speed limit. It tells the firm, hey, based on all the data from the past, we're 99% confident we won't lose more than X amount of dollars tomorrow. It's an absolutely crucial leash on risk-taking. The other critical part of this immune system is operations. Now, this is the unglamorous, behind-the-scenes work, but it is absolutely vital. They make sure every single detail of every single trade is perfect. It's like the cellular repair system, making sure the organism's internal plumbing is totally flawless. And I really can't overstate how important this is. A lot of the biggest financial blowups in history weren't actually from bad market calls. Nope. They were from simple operational failures. A wrong number typed into a spreadsheet, a trade booked incorrectly. It really is the silent killer. So, we have a brain, we have senses, and we have an immune system. But this organism still needs a skeleton for structure and a conscience for discipline. And that brings us to technology and governance. Technology is basically the firm's central nervous system and skeleton all rolled into one. It's what builds the massive data pipelines to bring in information, it powers the analytical engines for research, it provides the tools for lightning-fast execution, and, so crucially, it ensures the entire system is resilient enough to not just crash when things get crazy. And governance, well, that's the conscience. And this isn't just about bureaucracy and paperwork. Not at all. It's the set of rules and accountability structures that make sure the organism behaves predictably and responsibly, especially when it's under stress. It keeps the system from turning on itself. A truly smart organism learns from experience. It doesn't touch a hot stove twice. And the most sophisticated firms, they figured out a really powerful way to do this at an institutional level. It's called institutional memory. And this isn't just about looking back fondly on old times. It's a critical risk management tool. By systematically documenting every win, every loss, and every close call, the firm makes sure that those hard-won, expensive lessons aren't lost when an individual trader walks out the door. It becomes a true financial asset. Okay, now let's zoom all the way out and look at the final, and maybe the most important piece of this entire puzzle. We've seen all the individual organs, so how do they combine to create a creature that's truly resilient? The answer, it turns out, is diversity. A successful firm isn't just betting the farm on one single strategy. No way. It's like an investment portfolio itself, but instead of stocks, it's made up of different traders and different styles. So it's not one giant single engine, it's a collection of many smaller, very different engines. And this gives you a pretty good sense of what that might look like. You could have, say, 30% of your risk in big picture macro bets, 25% in systematic quant strategies, 20% in volatility, and on and on. The key here is that they're all different, and they're very unlikely to all fail at the exact same time. And this cohesion is what it's all about. This diversity stops everyone from piling into the same crowded trade, it provides stability when the market starts to panic, and it smooths out the firm's performance over the long run. But most importantly, it ensures that no single part can ever threaten the entire organism. Which leaves us with a final question to chew on. In today's world of finance, is the real genius that one star player? Or is it the design of the entire organism? That robust, resilient system that allows hundreds of different talents to not just survive, but to thrive together?